Hi guys, hi everyone. Good morning, good afternoon, good evening, wherever you are. Welcome to IC Market Global webinar. So today is gonna be part 3 about our Elliott web. Alright, we're going to do for practical trading strategy. Hi AJ. Since we are talking about Elliott web, okay, I think gold is finishing wave 3. Okay, I have that as well. I'll show you guys. Okay. Hi everyone. How you guys doing? I know that gold is fly high, right? It go all the way up. Okay. Hello Joy. Are you first time here? Okay, since we are waiting for everyone to tune in, okay, we are waiting. Shall we just wait for 1 to 2 minutes? Okay, I was the beginning of the webinar, I was just looking at the goal by using Elliott here. You can see that they are finishing the extension 161.8 and then they bounce off. Okay, this is H1 time frame. I will explain it later. Okay, again for the Elliott wave, right, you need to have time and look back in the past. Okay, and then after that you count the wave, and now they are currently, I think, gonna be wave 3 falling. Maybe they're gonna pull back how many percent? Small pullback maybe around here, gonna be wave 4. I'm not sure, so we need to monitor. Okay, I have that as well. I label all the waves in the using the monthly time frame. Okay, monthly time frame here, and all the way down to like H1 and H4. What are the prerequisite to study Elliott wave? Okay, for Elliott wave, like I just mentioned, you need to have time to look in the past. So basically I start with monthly time frame. Okay, and count the wave. So to me, either here is either wave 5 here or wave 5 here. Okay, within the impulse wave, they're gonna have a sub wave. Okay, I will explain it later. Okay, because we're going to do a recap, and after that we will use the Elliott wave to find the trade setup. Okay, shall we start? Everyone should be here already. Are you first time here? Are you first time? Joy? Nice to see you. Okay. Okay, before I start the webinar, disclaimer first. This is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation. Alright, IC Market makes no representation and assumes no liability as to the accuracy or completeness of the information provided, nor any loss arising from investment based on a recommendation, forecast, or other information supplied by IC Markets. And risk warning, trading for and safety carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Trading for the NCFD may not be suitable for investors, so please ensure that you are fully understand the risks involved and seek independent advice if necessary. Alright? And introducing to us today, my name is Peggy. I'm an investment analyst and a prop trader. And so basically today we're going to talk about web counting for different trading style, web confirmation with indicator, risk management and stop placement, and how to trade with Elliott wave with support and resistance. Okay, so quick recap on the basic cycle of Elliott wave. We already know that the Elliott wave, we have multi-wave, okay, multi plus collective. Actually, collective wave is just a pullback. Okay, and the cycle, they have a total of 8 waves, right? The multi and collective. Okay, which is wave 1, 2, 3, 4, 5, and ABC. Okay, and it's gonna be like wave 1 and wave 2, wave 3, wave 4, wave 5. Within the impulsive wave, like just mentioned, which you want to look here, they're gonna have like 1, 2, 3, 4, 5. And for the collective wave, it's like, you know, the retracement or the pullback. Okay, they move against the trend, right? Wave 2 and wave 4. Okay, the 3-5 structures. This is just a recap. Okay, which is we have the wave 1, wave 2. Within wave 1, we have a wave 1, 2, 3, 4, 5, and ABC, which is complete wave 2. Okay, 5 advancing wave mark up with wave 1, wave 3 declining wave make up to wave 2. Okay, and wave 3, okay, cannot be the shortest wave 1 and wave 5. Okay, they can be shorter than wave 5 but cannot be shorter than wave 1. Basically cannot be the shortest among wave 1, 3, and 5. Okay, any question? So basically here, okay, anybody short just now was short at this level, right? There's a pullback here. For example, that's going to be like my wave 3. Again, if you want to use the indicator, okay, there's an indicator and a trading wheel. You can search for Elliott wave chart pattern here, right? Now, I'm going to show you how I label the wave. For example, I go down to monthly time frame, and monthly time frame this is my wave, the one. Okay, I count from here: wave 1, wave 2, wave 3, wave 4, wave 5. And again, the rule is that, okay, let's say wave 2 cannot go below the beginning of wave 1. Okay, it can be retraced anywhere between 50 to 78.6%, but sometimes I think I saw it's about 61.8%. And wave 4 cannot overlap wave 1. Basically, they cannot overlap or go below. It could go here, but usually they will retest about 50%. The wave 2 to wave 3. So this is the retrace. Okay, that should be wave 4 should be retraced 38.2 or 50%. If really rare that I will see like they return 61.8, because if 61.8 is almost like at the wave 1 already. Usually I saw 38.2 or max like 50%. Okay, and how to project wave 5. For example, you see, okay, this might be a wave and a wave 4. Wave 5, either you use the projection, which is this is a position. Okay, wave 1 plus wave 3 equal to wave 5 is either 61.8%, we put here, or the distance of wave 1, then you just copy and put here. That might be the end of wave 5, something like that. Okay, and the wave 3, how do you get a wave 3? Wave 3 could be the extension, right? We will use the extension to find the wave 3. That will be extension 161.8, or could all the way up to 261. If they're gonna be extended wave, can go all the way to 361.80%, 361.80%. They're gonna be like wave 3 or wave 3 here. Okay, now this is the yellow wave, right? Okay, now if I were to label, this is gonna be my wave 1, 2, 3, 4, and 5 here. Within the impulsive wave, they're gonna be the sub wave. For example, here, the distance of wave 4 to wave 5, I count they're going to have a 5 wave, which is here. Okay, I remove this one. Okay, right? This is going to be assumed for you to see. Let's see, this is the, how many percent they retrace? They are retraced at 61.8%. Do you see this level? 61.8%. This is going to be wave 2, right? Within impulse wave. Okay, and now we have wave 1, wave 2. Now this is going to be a wave 3. How many percent is that? The beginning of It's go all the way how many percent? 161.8. I think this is going to be more than that, beyond all the way up to 402 427.20 wave 3. Okay, wave 3. After wave 3, do you see the pullback? Right, there's a pullback. So you use the Fibonacci retracement from wave 2 to wave 3. Do you see a pullback at where 50%? Right, this is a monthly time frame. If you see that, this is a 50%, this is going to be wave 4. What about the wave 5? All the way up there. So meaning that you want to count this my wave 5. Do you see that? Wave 3 is not the shortest among wave 2 and wave 5, right? You can see that. So the shortest is the wave 1, wave 3, wave 5. So in this case, wave 5 could be extended wave, right? Extended wave, that could be how many percent? All the way either to 61.8 or all the way up to here 361.8%. So we don't know yet, right? Is that maybe here or there? So I just leave it like that first. Okay, now you go down to weekly. Okay, within the weekly time frame over here, I also can't have another wave, so I remove this one. That's why you need to have time to look for the wave, right? For the wave 4, okay, to wave 5 there, okay, they also have this sub wave. I just include this one. Okay, you can see, right? Wave 1, wave 2, you just use the Fibonacci retracement here. They retrace about 61.8%. Okay, and go to where? To wave 3, pull back wave 4, continue to wave 5, maybe over here. I remove this one first. Okay, maybe over here, right? This one, wave 4. And wave 5, I'm not sure, maybe here or there. I leave it like that, okay? Because wave 5 haven't finished yet. And go to see right here, right? Within the impulse wave here, which is here, wave 3, they also have the sub wave, which is this one, right? Do you see that? Right here. Within the wave 3, which is this one, I also have the sub wave 1, 2, 3, 4, and 5 to complete the wave 3. Anyone get confused? Okay. It's go on and go on like that. Okay, so now back to the slide. So 3, 5, they just mentioned impulsive wave is always have a sub wave. Okay. The rule is that I just mentioned wave 2 cannot retrace more than 100% of wave 1. Wave 3 can never be shortest of wave 1, 3, and 5. Wave 4 can never overlap wave 1. So this is the rules that you need to follow. Okay. Cannot be overlap. Wave 4 cannot be overlap. Okay, so now we're going to talk about wave counting for different trading styles. So for the daily trading or your day trade, you can focusing on a time frame. Actually 1 minute there is 2. I need to remove actually this one could be M15. You can count that as well, M15, and you can look for H1 or H4. Okay, if you're day trade. Okay, after that you need to have a quick identify the impulse or collective wave. Okay, example, you need to identify the wave pattern in volatile intraday market. For example, here, let's say I'm day trade. Okay, so now let's say I'm at H4 time frame. Now in the H4 time frame here, okay, over here, why I count this one at the wave 3? Because this is a wave 3, 4, this is gonna be like end of wave 5, right? Wave 5 over here. Within the wave 5 that should have the impulse wave or sub wave, which is 1, 2, 3, 4, 5, right? This is the one. And how I get like this level, or you know, almost go to 30 to 32 there. They will use the extension. They will see that I go to H1. Okay, I will go to H1 to get the extension. Okay, let's say here. Okay. Now where did I get this web just now? I will get from the projection to 261. This is I'm using projection, okay? Oh, 200% projection roughly is here. Okay, like here. So it's gonna be like wave 3, pull back and continue to go wave 5. Okay, you can go to the lower time in like M30. Okay, like from here, you can see that I count wave 1, 2, and continue wave 3 within the small wave 3 here. You also can count like wave 1, wave 2, wave 3, wave 4, and wave 5 to complete the wave 3. Are you follow? You getting confused? Right? And this one, you can see that. Okay, so I will put here. So this is 200% projection. Okay, to get the wave 3. You can use the projection to get the wave 3 as well. Or wave 4 or wave 5, you can use the extension and projection. Okay, for the swing trader, of course you need to look for the daily and use hourly H1, H4 and daily chart. Okay, for day trading as well, actually you can use the M15, H4 and H1. Okay, for the position trading, you need to look for monthly and weekly, which just now I show you how I look for monthly to weekly and to daily time frame. Okay, now there's an indicator that you can use with Elliott wave. For example, if you want to use moving averages, you can use EMA and SMA. Okay, confirm wave direction and identify trend, you can use EMA 200 or SMA 50. But usually I only use one, which is EMA 200 to look for the trend. For example, H4 time frame. Okay, if I were to use the EMA, let's say EMA, right? I will use EMA 200, the period 200, to look for the trend. So basically, you look here, if our price above EMA 200, we will look for the buy entry. So the Elliott wave here, you will look that, okay, let me remove here. Good day to you, Jamilu. You just joined, right? Okay, for example here, if price above EMA 200, I keep buying. Okay, if price break below EMA 200, keep selling. Okay, or you find a sell entry. For example here, you know that gold is really strong, bullish, right? And then you can combine with the Elliott wave here. You can see that wave 3 finish pullback. Okay, you can see that pullback, which is where at EMA 200, which is gonna be wave 4, and they will continue to copy wave 5. Within the wave 5 here, they're gonna have sub wave, like you can see that 1, 2, 3, 4, and 5, which is this one, right? I just put the line here. Okay, right? And here also have the extension from where? From this high to this high to complete wave 5, and we also have the 200% projection in where? H1 time frame, right? That's why price is somehow reversed from that level. Okay, you can use this one, the Elliott wave as well here. Okay, but I personally don't use it. Okay, just count yourself. If you don't know how to use, you can just use this one, the Elliott wave. You find from the indicator, and then you just search, which is this one, Elliott wave chart pattern. Okay, if you want to. All right, and we continue. Okay, MACD and I sign, you can use the MACD for the divergence to identify wave reversal, but I personally use the I sign to look for the divergence. For example, go back here, pull out the I sign. Okay, the I sign first, I use the I sign to identify the divergence and over bought and oversold. Okay, I don't use, okay, this one, for example here, right? Based on H1 time frame, price already overbought, right? And then you might think, okay, this is gonna be end of wave 3 or wave 5, right? I go to H4 as well, it's already overbought. If price above 70, we'll say overbought. What about daily time frame? Daily time frame at 72% is already overbought, right? And then if you were to see here, it might see like creating the divergence here was the daily time frame, right? And this one, you might see the pullback here from this level, right? From this level and continue to go higher. Okay, you can use the eyesight to look for the divergence. I just remove this one. Okay, here. This is the M15, right? M15, I will see that finish the 200%, right? Wave 3, and you will see the pullback. Do you see here, right? Wave 3, 4 to wave 5. I go to the lower time frame. Can you count the wave here? Wave 1, wave 2, 3, 4. If I were to count here, wave 4 is I seem I want to overlap, so we're not gonna count. We go to M1. Okay, I will go to M1. It's gonna be like, let's say wave 5, right? I will count like okay, if I were to count, for example, 1, 2, maybe 3, 4, and 5 for the smaller time frame. Why I don't count here? Why I don't count from here? Because if I were to count like wave 1, 2, 2, and 3, and 4 here cannot, right? Because they are overlap wave 1, which is, this is not the correct count, wave count. So it cannot, right? So now go back here. So now I think we're going to see the pullback from here, 200% and pullback, finish wave 5 and pullback, right? This is the one. Okay, any question? Anyone confused for counting wave? Anyone? Okay, and you use Fibonacci retracement for identify potential reversal and target zone. Example like wave 2, right? Actually wave 2 retracement often retrace at 50% to 61.8% Fibonacci retracement. Here, oh, like I just show you. You were to see, this is H4 time frame, right? Just now I show you already, right? This is wave. This is retrace. You can see that 50%, right? You can see this is a wave 2, 50%. Often, I go down to another wave 2. I go to daily first, for example. Here, right? You can see here. Do you see? I include the line. The beginning of wave 1 to wave 4, right? You can see that this one is a large retracement. They are pullback where 78.6%. This is a large retracement. Okay, this in this case is 61.8% for wave 2. I need to remove this one. Okay, this is the one. See, this one had retraced how many percent? Almost 50%, wave 2. Or you can count from here, wave 2, 60%, either one, okay? Because this is a wave 1, pullback. This is either you want to count here or count here, that doesn't matter, 50%, okay? This daily time frame, I think I count this one already, 50%, okay, I finished this. Okay, now I go down to H1, okay, right here. Okay, 200% up there here. Okay, wave 1 to wave 2 here. I count at the wick here, right? You see how many percent they are retraced? 50%. You can see that is 50%. If you right, you can see the 50%. Okay. So often 50% to 61.8. What about wave 4? This is my wave 1, wave 3, and wave 4. Wave 4, how you measure wave 4? From the wave 2, wave 3, and you can see the pullback. 30.2%, but most of the time they not go below 50%. This is wave 4, right? You can see that 30% and bounce up and continue to go wave 5. What about this one? This small pullback. Not even 30, like 32%, but I just count this a wave 4. Okay. Wave 4. Like here. Retrace almost 30.2% to complete wave 4, which is here. Okay, so you measure wave 4, the starting point at wave 2 to wave 3 and pull back, complete wave 4 and continue to go wave 5. Any question, guys? Okay. Anybody sell gold? I do sell. Let me see. I haven't closed yet, guys. I still hold. Okay, I still hold because I was trading using Elliott this time for use the extension and projection, and this is gonna be the sell zone from here. 200% projection and the extension 161.8 somewhere around here. Okay, so this is like finish wave 3, wave 5, and you will see the pullback. Okay, continue here. You can use the volume analysis as well, confirm the strength of the impulse wave. Example, increased volume during wave 3 indicate a strong momentum. Okay, but personally I don't use that, volume to trade. I will just keep it simple. Okay, my indicator I'm using, okay, which is all the Fibonacci extension, retracement, and projection, and I'm using the eyesight to confirm the divergence and overbought also. Okay, if you want to use the Elliott wave, this is gonna be Elliott wave. If you want to look at the daily time frame, we talk about harmonic pattern. Okay, I know that we doing the Elliott wave, but remember that harmonic pattern. This I look like harmonic pattern, right? Oh, this is head and shoulder. No. Right? A, B, C, D. This is like crab. Is crab or what pattern? It look like harmonic pattern, right? This is the one, right? Now, do you think that, okay, since I'm using here, okay, I'll pull back. Where? I'm go back to H1. Okay, now, since they are going to finish wave 5 and the wave 3 here, they will pull back. How many percent? To complete the wave 4, maybe somewhere around 50%, right? Maybe here at 50%, which is around 0.101, no, 3017, and then you see the pullback. Okay, I go to the lower time frame here, like somewhere around here, which is in the lower time frame. This is the overlap support level. Okay, so just now price falling from 3028 to all the way to 3018, about 100 pip. That's good enough for gold, right? You 100 pip, one lot size, you already earn $1,000. Any question, guys? Okay, continue. Do you have any question? Okay, now let we practice elevate using another pair. For example, shall we look at the monthly time frame? What is this, right? Can I just count the wave by using the monthly time frame and look for the wave here? Where is the wave? You think they were getting higher for the EURUSD? Okay, use this one. Do you think this is gonna be the wave like that? Wave 1, 2, 3, 4, 5, and then ABC for the monthly time frame. Right? Is it difficult to count, right? For the are able to count, right? Just now they were to count here 1, 2, 3, 4, 5, and then we're gonna ABC that so long. If we're to look, it's gonna be downtrend for the monthly time frame for EURUSD. Okay, you can see that it's approaching the key level for the monthly time frame, which is here. Okay, and you look at the I side, I think can rising even more for the key level. Actually, this is gonna be the key level for the EURUSD. Okay, for the EURUSD, I'm not count the wave. Okay, but let me go to weekly. Okay. I will use the channel. Okay, I will use the channel here. Two, four, five. For the EURUSD, I'm still think that it's gonna be like the bearish. I did 2 here, 3, 4. I may continue to go down. Okay, if I want to count like within the bearish channel, you want to count like wave 1, 2, maybe 3 here, continue to wave 4 and wave 5. Okay, the daily intervals, right? Let me let it trace 50%, right? This one retrace 50% of wave, then you get wave 2. The wave 3, this one retrace 200%. You get a wave 3, 200%. Okay, it's a wave 3, 200%, which is they also line up with the support level, right? You can see that the support level. Okay, wave 3. Now we continue to wave 4. How you get the wave 4? Wave 3 to wave 4. Let it trace right here, right? 30.2%. Okay, wave 4, and they also within the bearish channel line. So now if they are not breaking this level, and meaning they are going to continue to go down. This is a weekly time frame. Okay, what about the wave 5, for example? Okay, wave 5 could be here. Could be here 78.6% or 100% or here, which is on our left. We don't see nothing. Still within bearish channel. I go to daily time frame. Okay, now the daily time frame, let me remove. Okay. This is my daily time frame, right? What you see then daily time frame? If they cannot break above this key level, they're going to continue to go lower. Here, the neckline, right? This one is gonna be the key level, which is at 78.6%. Either from here, they're gonna reverse and follow to weekly, right, within the channel and go to where? I should go wave 3 or wave 5. Okay, do you guys understand? Okay, any question? Okay, and now let me finish the slide. Okay, so for the risk management and stop placement, okay, you use the position sizing. Okay, you can allocate the money based on the wave structure and confidence level. Okay, for example, you should use a smaller position on a collective wave, right, and larger position on impulse wave. Why? Because the impulse wave, we trade follow the trend, right? For the pullback, which is a collective wave, you use a smaller position for the pullback. Okay, and then after that the impulse, okay, and you can use the larger position. Okay, for stop loss strategy, where you should set the stop loss below the key wave low and high. For example, if you should placing the stop loss below the wave 2 when entering the start of wave 3 here. Right, for example here. Okay, for example here. Okay, now you see that rising already. For example, this is a wave 2, okay, and then you buy. For example, like you entering here, right? Example, wave 2 here, you know that's the wave 2, and then you trade on the impulse to go to wave 3. The stop loss need to go put below the wave 2 because you can see that price need to go rise all the way, right? They cannot, you know, if they're not a wave 3, meaning that they're gonna hit stop loss and then falling. So they're going to make a all the way up higher, higher low, right? So you need to place the stop loss below wave 2 when entering at the start of wave 3. Okay, tailing stop loss, you can use that as a move the stop loss to lock in the profit during strong wave move, which is wave what? Wave, enter wave 3, right? Wave 1, wave 2, wave 3, pull back smaller and use the tailing stop loss and continue to go wave 5. Okay, risk and reward ratios, aim for at least 1 to 3 risk and reward setup. For example, you can use Fibonacci extension for your target, or you take profit for the higher return, for example, right? Here, if price wave 2 retrace 50 or 61.8%, Okay, wave 3 usually is about 161.8 and then you hold. Usually for the Elliott wave, they need to break above the high, right? And continue to go wave 3. Okay, pull back wave 2 and continue to go wave 5. You see that there's a pullback. Just now it go all the way in the lower time frame, right? You see that? I will tell that wave 3 here, pull back. From wave 4 to wave 5, they are here. How many percent? Almost 50%, right? They retrace at where 38.2% and then rising in a smaller time frame. Okay, any questions? I pause here for a while, guys. Okay, this is going to be the last slide before I end the webinars. Okay, so how to trade Elliott wave with support and resistance. So basically you combine Elliott wave with support and resistance, improve accuracy by matching wave count with the key level. For example, wave completes near major support or resistance zone or demand and supply. Okay, entry point, identify clear trade setup at wave termination near support and resistance or demand and supply, either you want to call it. Example, enter trade at confirm reversal near support after collective wave. Okay, exit strategy, use historical support or resistance level to determine optimal exit. For example, taking profit at key level zone during the upward impulse wave. Okay, here. For example, here. Okay, for example, if I buy, okay, at wave 2, okay, wave 2 here, you look for the color. I will change to black. Okay, let's say the beginning of wave 3, right, is my wave 3 here, for example, wave 3 here. I enter my buy all the way up here, and I know that this is gonna be end of wave 3, there's gonna be a pullback. I may close half position or I exit because they're gonna have the Fibo confluence here, 200% projection and extension 161.8, right? From here, either I exit my position here or I use the tally stop loss from here all the way up here to lock in profit, and then I know that from this level price might be a pullback to maybe this level. This level is where you use people, right? 50%. So this is gonna be the support level. From here you will see the the bar from this level to continue to go where if they're going to complete the wave 5, they need to go all the way up to somewhere around that level, this level to complete wave 5. Okay, any question? You see that some people buy from this zone, right, from M15. That's why you can see the rise from that level. Okay, I pause here for a while, guys. Do you have any question? Because this is gonna be end of my slide. And this one is the okay. Alright guys, that should be all for today. Okay, for the Elliott wave section. I'll pause here for a while. You have any question, guys, before I end the webinars? No? Okay, shall we just maybe 5 more minutes to look for the setup? Go to here. Okay, you see the price rising and again. I remove this one. Okay, I remove this one first. Okay, now. Okay, just now price falling could have already get the wave there, right? Wave 3. So then go to daily. Okay, you will see the pullback from here, right? This is a daily time frame extension and 200% projection. H4. Okay, if price falling to this level, 3000, let's just 3 and 10, let's just say at around this level. Okay, 3010 or 3008, you may consider to buy. Okay, because we also have FVG over here. There's a FVG here. Okay, fair value gap this level, but this is new coming up today, I think. Okay, okay, three. It's gonna be, I project this gonna be my wave 3. Oh, wave 4, sorry. That's me, wave, yep. Allow this level, like this zone. Wave 1, 2, 3, 4, 5. Somewhere around this level. Let's just say 3008 or 3005, which is 1, 2, 3, 4. And at the A, B, C, I don't know. Okay. No question. Okay, USD chef last one. Okay. I will highlight the key level for you. Oh, these are daily time frame. Either they count like, you know, 1, 2, maybe 3 there. Like you would just to count like that. I don't know. Okay, 1, 2, maybe haven't complete 3. Or here 4 and 5. 200% complete wave. Either 161.8 here or here. We don't know yet. Okay. This is monthly. I go weekly. I will leave it like that. I'll just find the key level for you. This is the support level. Okay, guys. How many percent? 61.8%. Okay, here. The key resistance, if you think that's very confusing, okay, that's okay. There is so many strategy that you can learn. This is first resistance level. Okay. This is gonna be the first resistance right here. You can see that. for H4 time frame, red. This is second resistance for the H4 time frame. Okay. I will move up. Precise support is right here in H4, right? The second support level is here. Okay, which is use the extension. They'll go how many percent? 161.8 maybe. Okay, exact somewhere around there. So this is a key level for you. Okay. Maybe like that. Wave 1, 2, 3, 4. If they break above, this is gonna be like either wave 4 here and continue to go lower. Right? 1, 2, 3, either 4 here or 5. Either they put at 38.2 or this is wave 4. So you just look for these two level, okay, and continue to go lower. Okay, guys, that's all for today. Thank you so much, guys, for your time. I will see you guys again in the next webinar. Okay, you're welcome. Okay, bye for now, guys. Take care. See you again next week. Bye for now.